Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on SPY, IWM, and QQQ on the daily and the weekly time frame. So the bulls seeing a new all-time high at the open today. But again, it's the same thing we've seen for 2 weeks. The financial sector was a laggard. The tech sector continues to beast to new all-time highs, but the tech sector cannot do it on its own. We need the financial sector bulls to show up. They did yesterday, and we saw what happened with this nice big bull day, but not so the case today. And seeing that show up with some consolidation. It's normal, healthy consolidation. The bulls are still in full control. We closed at about the middle of the range today, and we're looking down at, as long as anything above 238.13, we'll keep higher lows on the daily and new all-time high multiple days in a row, so the bulls are still certainly strong. And where we stand from right now, we're either going to see the tech sector consolidate, and SPY is going to consolidate more significantly, or we're going to see the financial sector bulls show up, and we're going to see the S&P 500 see some more strength to the upside, more days like we saw yesterday, which before yesterday, we hadn't really seen a very convincing bull day, and that's because we haven't had both sectors going in the same direction with the same amount of strength. So the weekly time frame for SPY is still slow and steady to the upside. We are seeing volume decline on the weekly the past month, and that is notable, and that is potentially showing the bulls running out of steam a little bit. Now, because we're at all-time highs, it's a lot easier for the bulls to shake off any kind of bearish indications, but I would look at that weekly chart and that volume and say, okay, we're getting a little extended. We might be in for some normal, healthy consolidation and some pullback, which we haven't seen in the past 4 or 5 weeks. IWM, bulls buying the dip. We filled a little gap to the downside here, but the range to be watching is 136.98 support, the low of the last month, and 139.48 resistance, the high of the last 3 weeks. That's the range that we've been trading in with the past 3 weeks. Bulls buying the dip and bears rejecting the highs, and we have to see a break of that for short-term direction. The weekly time frame is still very healthy for IWM. After the all-time high, we're pulling back. We're back testing and holding the weekly middle Bollinger Band support and holding it. It's a bullish reversal candlestick so far on the weekly time frame, and it's also an inside bar on the weekly time frame that we'll be watching. If we don't break that range that I just highlighted on the daily, we will be looking next week for this inside candlestick with this tight range to break and give us that short-term indication. QQQ, with the tech sector leading the way, continues to rip to all-time highs, and bull flag after bull flag, extremely strong, no slowdown, closes at the high of the days 4-5 days in a row, and we're looking up at 139.64 and 140 psychological resistance, just 5 weeks of straight upside and nothing bearish. Again, I keep saying in every video, can't possibly say anything bearish about the tech sector nor QQQ with how we currently stand on these charts. And that's why it's going to be up to the tech sector consolidating to see the S&P 500 potentially lose the higher low pattern on the daily time frame because of how strong we have been, with the tech sector being the strongest or the most significant holding in the S&P 500. That is what's keeping this market so strong. So thanks again for tuning in. We'll check back in tomorrow, see how it plays out with the financial sector needing to get over the 50-day moving average resistance. We rejected for the 7th day in a row, not in a row, the 7th test in a row from that 50-day resistance. So thanks again. Have a great day, and we'll see you soon.